Imagine waking up, checking your bank account, and seeing your entire life savings gone. Not through a hack, not a forgotten password, but by your hand, in seconds, with virtually no chance of recovery. This isn't a dystopian nightmare from a cyberpunk movie. This is the brutal reality facing countless victims right now, and by 2026, it's set to become an epidemic. The very technology designed to modernize our financial lives, real-time payments, is being weaponized, turning convenience into catastrophe. The promise was simple: instant transfers, 24/7, 365 days a year. No more waiting days for funds to clear. A leap forward for small businesses, for emergencies, for everyday transactions. But what if that speed, that irreversibility, became the scammer's ultimate weapon? What if the system built for you is now actively draining your bank accounts faster than ever before? We're talking about systems like FedNow in the US, the UK's Faster Payments, India's UPI, and countless others globally. They're called authorized push payment, or APP fraud, and they're ripping apart the financial security of individuals and businesses alike. But how did we get here, and why are our financial institutions seemingly powerless to stop it? The core vulnerability lies in the very nature of real-time payments. Once you hit send, it's gone, irreversible. Unlike traditional bank transfers where you might have hours or even days to flag a fraudulent transaction and potentially get your money back, with RTP, the funds vanish from your account and appear in the scammer's account almost instantaneously. It's like handing over cash, but digitally. One of the most insidious methods exploiting this speed is impersonation. Scammers pretend to be your bank, a government agency, even a trusted family member. They create a sense of urgency, a panic, coercing you into making that authorized push payment. They'll tell you your account has been compromised, that a fraudulent transaction is pending, and the only way to secure your funds is to transfer them to a safe account, which is, of course, their account. This isn't just about unsophisticated phishing anymore. These are highly organized operations, leveraging advanced social engineering techniques, sometimes even using AI-generated voice cloning to mimic loved ones. They prey on our trust, our fear, and our instinct to protect what's ours. And by the time you realize you've been duped, your money is already dispersed, laundered, and untraceable. Consider what happened to Mark.
He received a text message, seemingly from his bank, warning of suspicious activity. A link led him to what looked like his bank's login page. He entered his details. Moments later, a call came in, again, ostensibly from his bank's fraud department. The voice was calm, reassuring. They told him someone was trying to transfer a large sum from his account, and to stop it, he needed to move his funds to a new, secure account immediately. Mark, panicked, followed their instructions. Within 2 minutes, his life savings of over $80,000 were gone, transferred via a real-time payment system he thought was protecting him. When he called his actual bank, their response was chillingly familiar. "You authorized the payment. We can't get it back." This is the critical distinction: authorized push payment fraud. You, the victim, are authorizing the payment. From the bank's perspective, they've simply executed your instruction. Unlike credit card fraud, where the bank or card issuer often bears the liability, with APP fraud, the liability often falls squarely on the customer. It's a legal loophole that scammers exploit with devastating precision. Many banks argue they're merely facilitators of a system designed for speed, not security against human error or manipulation. But critics, including consumer advocates and even some regulators, are asking, is that good enough? When the very infrastructure banks are promoting opens up such a massive vulnerability, shouldn't they bear some responsibility? Historically, the financial system was built on friction. Checks took days to clear. Wire transfers had layers of verification. These delays, while inconvenient, offered a crucial window for intervention. Real-time payments stripped away that friction, but didn't adequately replace the safety nets. By 2026, real-time payment systems are projected to be nearly ubiquitous. FedNow, launched in the US in 2023, is steadily expanding its reach. More banks, more businesses, more individuals will be onboarded, and with that wider adoption comes a larger attack surface for scammers. The scale of the ripoff is set to explode. So what are we up against? Beyond impersonation, there's invoice fraud, where scammers intercept legitimate invoices and change the bank details to their own. Knowing a business will often process large payments via RTP without double-checking every single time. There are romance scams, where victims are slowly groomed, then pressured to send funds to a partner in distress, funds that disappear the moment they're sent.
And then there are sophisticated investment scams, promising impossible returns, only for your initial investment to vanish into the real-time abyss. The speed means that once the money hits the scammer's account, it's often immediately moved again, split into smaller amounts, and transferred across multiple accounts, sometimes even converted to cryptocurrency, making it incredibly difficult to trace and recover. The traditional legal and banking mechanisms simply aren't fast enough to keep up. Regulators are playing catch-up. The existing laws were designed for a different era of banking. We need stronger consumer protection, and we need to rethink where the liability truly lies when an authorized payment is in fact fraudulent. The banking industry, for its part, is under increasing pressure. In the UK, a contingent reimbursement model has been implemented, requiring banks to reimburse victims of APP fraud in certain circumstances, effectively shifting some liability back to the institutions. But even there, it's not a blanket protection, and in many other countries, similar protections are either non-existent or woefully inadequate. They'll tell you to be vigilant, to scrutinize every call, every text, every email. And yes, personal vigilance is crucial. But is it fair to place the entire burden of defense against highly sophisticated, globally organized criminal networks on the individual customer, especially when the system itself enables such rapid, irreversible theft? So what can be done? For individuals, the advice remains critical. Always verify. If someone calls claiming to be your bank or a government agency, hang up and call them back on a number you know is legitimate, not one they provide. Be suspicious of urgency. Never share one-time passcodes or PINs. And remember, your bank will never ask you to transfer money to a safe account. But this isn't just a personal responsibility issue. It's a systemic one. We need stronger regulatory frameworks that mandate better fraud prevention at the institutional level, including confirmation of payee services, where the name of the recipient is checked against the account number. We need clearer liability rules that protect consumers, especially when banks are actively promoting the very systems that expose them to such risk. By 2026, this won't be a niche problem. It will be a global crisis of trust in our financial systems. The convenience of instant payments comes at a terrifying cost if we don't demand better protection.
Because right now, the system isn't just fast, it's a superhighway for scammers, and your life savings are the next unchecked parcel. The promise of real-time payments was financial liberation. The reality for many is financial ruin. The question is, how many more will lose everything before we finally address the 2026 real-time payments ripoff? Don't let yourself become another victim. Stay informed, stay vigilant, and demand better from the institutions we trust with our money. If you found this video insightful, hit that like button, subscribe for more deep dives into financial tech and scams, and share this with anyone who needs to hear it, because knowledge in this new financial landscape might be your only true protection.